Hello and welcome back to the channel. In today's video, we are going to be reviewing another popular forex broker named Deriv to help you figure out if it is one you can trust as a Nigerian trader. So whether you are brand new to trading and looking for a broker, or you are an experienced trader thinking about switching or trying out a new platform, this video is for you. We will cover all the important things like their licenses, the platforms they offer, the markets or instruments you can trade, their account types, fee structure, deposits and withdrawal methods, customer support, and more. So if you are curious about Deriv and whether it is the right broker for you, stay tuned. Jumping straight into the review, we will consider their licenses first. Using a broker that is well regulated is extremely important because it ensures that your funds are well protected, and the broker has to comply with strict rules to keep you and your funds safe. There are many other reasons why you would need a licensed broker, but we can agree that your funds being secure is top of the list. As of the time of making this video, Deriv does not hold a Tier 1 license from regulators like the FCA or ASIC. However, they hold Tier 2 and 3 licenses from the likes of Vanuatu Financial Services Commission in the Republic of Vanuatu, the Malta Financial Service Authority in Malta, the Labuan Financial Service Authority in Malaysia, and the British Virgin Islands Financial Service Commission in the British Virgin Islands. This may be a bit concerning given that Tier 1 licenses are much more stringent and give the highest level of confidence. But since Forex is not exactly regulated in Nigeria, this might have to do for now. Now let's see if other Deriv features can sort of make up for their lack of Tier 1 licenses. The next feature we will look at is Deriv's market offerings. Deriv offers a wide variety of markets for you to choose from, including Forex, derived indices, stocks, stock indices, commodities, crypto, ETFs, and tactical indices. Starting with Forex, Deriv offers over 50 currency pairs across major, minor, and exotic pairs, including popular ones like the Euro USD. They also offer micro pairs, which allow you to trade major and minor pairs in smaller volumes. This makes micro pairs perfect for beginners or those who have limited capital. Additionally, Deriv provides a maximum leverage of 1 to 1000 on all Forex instruments, giving you the potential to control larger positions with a smaller amount of capital. However, it is important to remember that while higher leverage can amplify your profits, it also increases your risks of losses. So always use risk management tools like stop loss orders. Next up is stocks. Deriv offers over 50 stock instruments from various sectors like technology, transportation, financial services, and retail. These include globally recognized companies such as Apple, BMW, Bank of America, and Coca-Cola, giving you access to a diverse range of trading opportunities. Moving on to indices, Deriv offers three main types. They have the stock indices, the derived indices, and the tactical indices. For derived indices, you can get access to multiple categories, including drift switch indices, DEX indices, and volatile indices. This means you can trade popular instruments like the Crash 600 and the Crash 900 indices, amongst others. Additionally, Deriv offers a maximum leverage of 1 to 1000 on derived indices, giving you the potential to control larger positions with a small amount of capital. For stock indices, Deriv provides access to indices from North America, Europe, and the Asia Pacific region. You can trade well-known indices like the US Tech 100, US SP 500, UK 100, Europe 50, France 40, and Japan 225. Now let's talk about tactical indices. These are synthetic markets created by Deriv, meaning they are not tied to real-world assets or events. Instead, they are generated using advanced algorithms that simulate realistic price movements in a controlled environment. With tactical indices, you can trade instruments like the Silver RS1 Pullback Index, the Silver RXI Rebound Index, the Silver RSI Trend Down Index, and the Silver RSI Trend Up Index. These indices are designed to offer predictable volatility, making them ideal for both beginners and experienced traders who want to test their strategies in a less chaotic environment. One of the best things about tactical indices is that they are available for trading 24/7, so you don't have to worry about market opening or closing times. Plus, since they are synthetic, they are not affected by real-world news or economic events, giving you a pure trading experience based purely on price action. This makes them ideal for traders who prefer to focus on technical analysis, as the movements are determined by the algorithm rather than external market factors. So this allows for a more predictable and strategy-driven approach. Now let's look at commodities. Deriv offers a wide range of commodities including precious metals like gold and silver, base metals, natural energies like Brent crude oil and natural gas, and soft commodities like cotton, cocoa, and sugar. So whether you're interested in energy markets or agricultural products, Deriv has you covered. Additionally, Deriv provides a maximum leverage of 1 to 1000 on commodities, giving you the potential to control larger positions with a smaller amount of capital. Deriv also offers ETFs, with more than 30 options spread across two major categories. ETFs allow you to trade a basket of assets, providing diversification in a single trade. Finally, Deriv provides access to cryptocurrency markets, with 24/7 trading available for major coins like Bitcoin and Ethereum, as well as many other cryptocurrencies. Whether you're a crypto enthusiast or just looking to diversify your portfolio, Deriv's crypto offerings make it easy to get started. Additionally, Deriv offers a maximum leverage of 1 to 1000 on cryptocurrencies, allowing you to maximize your trading potentials. Before we go further, it is important to note that Deriv offers two types of trades. We have the CFD trade and the options trade. The CFD trade allows you to trade all the assets we've talked about so far, like forex, stocks, indices, commodities, ETFs, and cryptocurrencies. When you trade CFDs, you are essentially speculating on the price movements of an asset without actually owning it. On the other hand, the options trade is a bit different. With options, you are not trading the asset itself, but rather making a prediction on whether the price of an asset will go up or down within a specific time frame. So for example, you might predict that the price of Euro USD will rise in the next 5 minutes. If your prediction is correct, you earn a profit. If not, you lose your stake. Options trading is straightforward and often appeals to traders who prefer short-term, quick trades with defined risk and reward. Having gotten that out of the way, let us look at the trading platforms Deriv supports for CFD trading. Deriv offers the Deriv MT5 platform, which gives you access to all tradable CFDs Deriv has to offer. They also offer the Deriv C-Trader, which is a bit more restricted in market offerings, but gives you access to copy trading. And finally, they also offer the Deriv X platform, which gives you access to all available CFDs and also gives you direct access to premium tools on TradingView like chart types and numerous technical indicators and smart drawing tools. And all three of these platforms come with demo accounts to help you practice your strategies in a risk-free environment. As for account types, most of them are tied to the Deriv MT5 platform. They have the standard account, which allows you to trade derived and financial assets. This account has no minimum deposits, no commission, and comes with spreads starting from as low as 0.1 pips. The next account type is the zero spread account, and just like the standard account, you can trade both financial and derived assets here, and it does not have a minimum deposit also. However, it comes with zero spreads and as a result attracts commission on every trade. The swap-free account is quite similar to the standard account, with the only difference being a slightly higher spread starting from 0.3 pips compared to the 0.1 pips on the standard account. The financial account also comes with no minimum deposit, no commission, and spread starting from 0.2 pips, but this account can only be used for financial assets. Then we have the gold accounts. This one also does not have a minimum deposit or commission, but the spread starts from 25 pips and it is only for commodity assets. And if you would prefer to use the Deriv X platform, you would need a Deriv X account to trade on the platform. The next feature we will talk about is the trading fees on Deriv. So most accounts on Deriv are commission free, which means they come with spreads. While the spread starts from 0.1 pips on the standard accounts, the actual spread depends on the trading conditions. Let's take the Euro USD instrument for example. We can see here that the spread for this particular instrument is 1.4 pips, and it is quite different from others around it. As for the trades that come with commissions, the actual amount isn't fixed. It is determined by the volume of your trade. Deriv doesn't charge any deposits and withdrawal fees, so if you get a charge, it would be from your bank or the payment processing platform you use. If your account is dormant for 12 months, Deriv will charge you an inactivity fee of $25 every 6 months until you return or your account runs out of funds. It is also worth noting that Deriv does not charge a conversion fee. Again, if you will be charged, it will be from the payment processing platform you use. Moving on to deposits and withdrawals. Deriv offers several options for you to fund your account and withdraw your funds, from credit and debit cards to online banking to mobile money, e-wallets, cryptos, and even vouchers. The only issue is that you would need to convert your deposits into an acceptable currency on the platform. Another important feature on Deriv is their educational resources. The Deriv Academy has lots of materials to help you become a better trader, and the Deriv blog gives you insights on what is happening in the markets. Deriv also has a community where you can get help or learn from fellow traders. There are discussions on various topics, from announcements to accounts to trading platforms and more. And this brings us to the final feature to consider on Deriv, which is their customer support. Deriv has an help center that provides answers to questions you might have, and if your issue still remains unsolved, you can actually reach out to them via live chat or WhatsApp. So in conclusion, Deriv has everything you would need to have a great trading journey and more. They have a good number of market options to choose from, they are regulated, and they also provide assistance with learning materials amongst other good benefits. So if these features are things you are looking for in a broker, Deriv might just be a very good option for you. Thank you for watching. If you like this video, kindly give it a like and subscribe to the channel for more forex related content. And if you want to watch our in-depth review of other brokers, you can click on the end card here to see the playlist. So until next time, happy trading.